I think, John, the most important thing is to get yourself out into the real world. So when I'm in New York, I will confess, I ride the subways. And if you look at the people sitting across from you, probably 60–70% of them are on cell phones. I was also wandering around Soho. We were doing some shopping on Saturday, and there was this store that was really much busier than any of the others. Turned out to be an Apple store. So I look at Apple, and you have the numbers, and the numbers are very persuasive. The free cash flow generating ability is just unprecedented. But you also have this consumer franchise that I think is not appreciated. Apple is basically a part of people's lives. It's going to continue to be a part of people's lives. You're going to have this hopefully very significant technological innovation with regard to 5G coming up 8–9 months from now. Will there be some hiccups? They've already warned on the first quarter. I think it's going to go longer than the first quarter because I think the market's currently underestimating the impact on supply chains. But once the dust settles, and I think the dust will settle, it looks like it's settling in China right now with regard to the number of cases in the virus, it has to be the first stock that you buy at the margin. Not this afternoon, but sometime soon.
All right. Well, Chris, I remember when China was a weakness for Apple in a different way. They didn't have first-party stores there. They had lots of counterfeit issues. They had trouble getting the wireless carriers that they needed. Now it's strategically so important, both as an assembly manufacturing hub and just as a market for them. So is there the chance that coronavirus is exposing any kind of strategic error that they might have made, or has everything you've seen so far suggested that they've actually done well in how they've structured their presence in that location?
Well, look, I would fully agree that this is a hiccup. And I think that what they've done strategically on a global scale is correct. And I think we're going to probably be looking through to probably a couple quarters here. A lot of the small cap names that we invest in are the suppliers in that supply chain, the assembly, the testing of it. And, we are seeing weakness there. We're hearing from companies who aren't yet able to give us guidance. I think we're going to hear a lot of that in March. I think the pre-announcement season could be pretty bad in March for a lot of those companies. But this is temporary. We're out there today with a lot of buy limits, kind of below the market. But we're a buyer out there. We think that this is a great opportunity. We've been cautious for the last 6 weeks or so. And so this is the opportunity to really pick up some good value names. But I don't think it's over this afternoon.
Well, would you buy now or wait till the guidance comes out and some of these bottlenecks are more obvious?
Well, as I say, we're below the market trading with limits. So we're not out there with market orders where you can just get taken along and filled. We're strategically below, and it's only a portion of what we would want to own. So if I want to own 100,000 shares, I may be out there with 5 or 10. That would be a trading strategy for those who want to inch in and put some money to work.
Yeah, along the same lines, and back to what you just said, Larry, you mentioned that Apple would probably be the first stock you'd buy, but not on a day like today. What does that mean? Do you feel like this pullback's going to get deeper?
Well, I think you have to be respectful of the market's technicals, Morgan. And at 2:30, margin calls go out. So if there could be some forced selling of the stock later on in the afternoon. So I think there's time to wait. And you look at these things, and they're not going to go away. The other stock I think you have to look at here is Google. Google doesn't have any exposure in China. And I was at Toy Fair last week, and Peppa the Pig, 44 million views on YouTube. So I think people are underestimating the power of YouTube, to say nothing of Google's monopoly position in search. So that's going along as all the FANGs are trading like ETFs rather than individual companies. I think that's a great place to go alongside Apple.
So then Apple, you just mentioned Google. In general, the fact that we have seen big tech, maybe not today, we're seeing those names fall as well, but relative to the broader market, maybe hold up a little better. Minimal exposure for China, to China for many of these names. Are they also buying opportunities?
Well, I think the thing that's works in favor of the market right here, Morgan, is this is a deflationary problem. It's not like the price of oil going up and squeezing consumer incomes. Consumer incomes are going up right now because the price of oil is going down. The ability to spend is going up because employment so far hasn't been hurt, and there may be some shortages of goods temporarily. So we're going to see a very, very fine bounce back here in the U.S. consumer sector, and that will more or less drag the rest of the world along with it. So the lower the market gets here, the more optimistic you have to be. But I think we've got a couple more percentages to go down, and the idea that you can get 137 in government bonds is just the biggest commercial for equities that I've seen in my 45 years in the investment business.